remember that in the earlier topic, standard price, moving price and vendor price explanation, I told you that when we do invoice receive, when we receive invoice from the vendors, if the price and quantity is different from the purchase order price, then the system will post the difference of the price to a price difference account. Alright, this will happen only when the material master uses standard price. So I'm going to show that to you under this topic, handling invoice and GR variances. The two types of variances that can happen between invoice and good receipt. For example, let me open up my purchase order. Okay, this is my purchase order. Okay, so with the difference is between invoice and good receipt. Okay, so when we receive the invoice from the vendor, if the price that is mentioned on the invoice is different from the purchase order price, which is this, then there will be a price variance. So that price variance will be posted to a price difference account. The reason being, let me explain this to you in clear terms. Okay, let me pull out the other document. Let me pull out the material document, which is this. Okay, as you can see here, the goods that we receive from the vendor is 6, and the invoice that we receive is also 6. So there's no quantity variance here. So remember, I told you that two types of variances. Let me show you what the variances are. The two types of variances. Okay, I'm going to explain to you what is price difference first, in what scenarios a price difference can happen, and a quantity variance will happen later on, because we cannot assume that whenever we receive a vendor invoice, it's going to match the GR quantity and price exactly as it is, because it's not the case. Because as I told you, when we raise a purchase order to the vendor, we will mark the purchase order price based on the last known price of the vendor's material price. Okay, we will not know if the vendor has changed the price in between from the last order up to the new order. So that can happen. So when we raise the purchase order, we normally won't call the vendor to ask for the latest price. We'll just raise the purchase order based on the whatever last price information that is given to us by the vendor. And when the vendor sends the invoice back to us, they will use the latest price in the invoice. So in this case, when we receive the goods, remember, when we receive the goods, if the material master is using standard price, we would have updated our GRIR account based on the purchase order price. Okay, not the vendor invoice price, because when we receive the goods, we would not have received the vendor invoice yet, so we won't know what is the latest price. So let's say when the vendor has increased the latest price to $60, let me use a blue color. I'm going to update this as $60. So the latest price is $60. Let me update. Latest price of this material is 60 and not 50. Clear? So our vendor invoice will have $60 written here and not 50. Okay, so in that case the entire amount of the total amount of the tire A and the total amount of the invoice will change. How will it change? Let me use a blue ink again. Let me move this down a bit. Okay, oops, let me move this down. So that's for the VAT tax. So my new total price for material is US 360. Alright, sounds good. And plus the tax, the total price will become 390. Let me move this a bit. Okay, I'm going to enter 390 for the total price. Good. So now let me say this. What this means is that there's a price increase of $10 for each unit. So that's what's shown here. So in that case, let us inspect the material document for this purchase order. This is the purchase order, right? Remember, this is the purchase order for which we entered the invoice. So let me go to the material document. We look at the accounting document. Okay, GRIR is done based on the purchase price, which is purchase order price, which is $50. That's why you can see here $50, and you can see here 6 times 5, 300. So when we do the invoice now, let me check the earlier invoice that we did for the price $50. Follow on documents. When the price is $50, okay, we get a $300 total. So our invoicing is pretty straightforward, whereby we reverse out the GRIR clearing of 300 and we credited vendor 300 plus the tax $30. So but in this case, if the total is 360 and the price is $60, so in the invoice, when I enter my row, let me just pull it out. Okay, I can't pull it out now because it has been already invoiced. So let me create another purchase order, MA21, and I'll adopt from this purchase orders. And adopt from this. Copy. Okay, just save it. Okay, now purchase order generated. So let me do amigo. I'll copy this, Control C, go to amigo, do a good receipt, enter DN003, item OK, storage location WH1, post. Alright, good receipt has been posted. Now we can do my row. Okay, pull out the purchase order, which is this. Why there's no information? Let me just check. Nothing is coming up. Not sure. Oh, this is credit memo, because the transaction is credit memo. So I need to change this to invoice. Let's make sure that is correct. Okay, now I can see. So I received 10 units. I can get. The reason why we need to create a new purchase order is because the earlier purchase order has been fully invoiced. So if you try to invoice again for the earlier purchase order which has been fully invoiced, you will not get anything. See this? It's throwing some other error message. Let me just clear this. My row. Okay, there's a way how you can default this VN to V2. I'll show you now. It's always defaulting to VN, right? So you can do this. Come here. Here, logistics journal, material master, or not on the logistic journal, sorry about that. It's still in the logistic invoice verification here. Logistics invoice verification. Here, this is the one. Maintain default tax values for tax codes. If we change this, go to Sun, then double click. See, VN is defaulted. You can just change this to V2. Okay, so that whenever you open up a Miro screen, this will be defaulted V2. Okay, change this to V2 now. Right, now I come to Miro. See, it's defaulted. Very useful, right? Just remember that. Where you have to, let me show you that. It's in SPRO, material management, logistic invoice verification, incoming invoice, maintain default values for tax codes. Alright, now okay, I was telling you that if I choose the earlier purchase order which is fully been invoiced, you will not be able to see, nothing is coming out because this has been fully invoiced. If you can see here, we ordered 6 units. No, I mean we ordered 10 units, we received 6, and we have invoice for 6. Okay, so there's a balance of 4 units to be received, but nothing is to be invoiced because all the 6 units that we receive has been invoiced. That's why nothing is coming out here. So that's why we need to use the new purchase order that we created. That's what I'm doing now. For information, okay, the new purchase order is 93, right? Okay, now I'm going to play a trick here so that we can understand what is this. Instead of entering, oh, I've received all 10. Sorry about that. I should have received only 6. Alright, I need to cancel this good receipt again. Sorry about that. Let me go to ME23N because the receive unit should be 6. 93. I'm going to reverse this material document and enter 6 units again. I go to MBST. Okay, cancel. Enter again, cancel it, enter again. You can skip all the warning messages by clicking the enter. Okay, reversed. Now I can enter the good receipt again for 6 units. May go, oops, not this purchase order, the different purchase order. I copy this and change it to 93. That's our purchase order. Okay, I'm not going to receive 10. I'm going to receive 10. I'm going to put it in warehouse 1 and click item OK and save it. Oh, I didn't enter the delivery note. Doesn't really matter. We can do the invoice based on the purchase order. Okay, posted. I'll close this. Go to my row again. And the purchase order, which is 93. Press enter. Oh, that's the reversal. Just since there is a reversal, it's showing 0 here. Don't worry. So just look at this. 6 units, right? 6 units times $60 is 360. So but what is shown here is 300 because this is pulling the values from the good receipt. The good receipt price is still $50 because the good receipt is using the purchase order price, which is $50. Alright, so that's why it's still 300 and unit is 6 units. But when we receive the physical invoice, the invoice will be in our hand, the vendor invoice. So by looking at the vendor invoice, we know that the total amount is 360 because the price has been adjusted to $60. So all you need to do is just change this to 360. You don't have to enter the price because price is redundant. By dividing amount by quantity, we will get the price. So we just need to enter the total amount. So now we have changed this already to match the actual vendor invoice, which is this. The unit is still 6, no change on that. Now I'm going to post this. Before that, let me simulate. Okay, the tax is 10%, so the total amount 390. I enter 390 here and calculate tax, and I enter the baseline date. Okay, simulate. Alright, so what do you have? 390. Yeah, okay, this is what I wanted to show you. Okay, let me pull out the invoice without any price difference and show you the difference. Go to follow on documents, go to accounting document. Okay, the earlier invoice that we posted where there's no price difference, where the price is only $50, you can see the 330 is credited to vendor, but in this case we are crediting 390, and the GRI clearing is cleared with 300. That is correct. That has to be same here, 300, because the earlier the GRIR has been credited with 300, so we still have to reverse using the same 300, but by doing so we realize a difference of $60 because of the price difference here. Since the price has increased to $60, we'll have a total of 360, so the difference between this and this is $60. So that $60 has to be posted somewhere, right? Only then the both credit and debit balance will balance, otherwise it won't be balanced, because we cannot clear the GRIR account using $360. Okay, because we are crediting the vendor for $360 minus the $36 of the input tax. Oh, there's a balance of $6. Okay, wait, let me see how to clear the, why the input tax is $336. I'm not sure. Okay, $36. Okay, that's my mistake. The tax should be $36. The new tax of the 360 should be $36, not $30. Sorry about that. So the total will be 396. Is that right? Yeah, 396. It was my mistake. Okay, because 10% of $360 is 36. 396. So I'm going to change this to 396. Let's simulate again. Alright, still there's no balance. Please look at this, ignore this because that has been cleared. Yeah, I see. If I simulate again, what is the yellow message here? Let me check. Okay, this is, you can ignore this for time being. I'll explain to you what is tolerant limits later on. Okay, now simulate. So there's no balance of $6, so input tax is $36. Alright. Okay, let me pull out the Migo document so that we can understand this thoroughly. Okay, this is a reversal that we did. We can ignore these two, those wrong postings. We can go to this. We can go to document info and go to FI documents. Okay, now just compare these two documents here. The earlier good receipt that we did for this purchase order has credited GRIR with 300, because based on this principle here, the GRIR will be updated using the purchase order price, which is $50. Alright, so now our GRIR has got $300. So when we do the invoice, we cannot use $360 to reverse the GRIR clearing. If we do that, then there will be a balance of $60 uncleared in the GRIR forever, which is very wrong. So the $60 has to be the price increase of $10 results in a $60 total, has to be posted to some other account, so that we can differentiate the price increase and the original price. Okay, what is the price increase, what is the proportion of the price increase, and what is the actual amount of the original total, which is 300. So in this way we can differentiate. So this is the reason why the system is posting this $60, the extra $60, to a price difference account. Okay, it will post a debit if the price increase is actually higher than the original price, because the net effect is that the business is paying more money to the vendor than the originally agreed price, so this is an expense. So since this is an expense, it will be posted to the debit side. That's why it's debit here. On the other hand, if this price is $40, the price difference is $40, which means that the business, the Sun Limited, has to pay something lesser than the original price of $50 to the vendor, because if this is $40, then we are paying something lesser. So that will be regarded as an income for Sun Limited, so that will be posted on a negative side, on the credit side. Okay, and this will reduce accordingly. I can show that to you later. Okay, let us post this to the debit side first, assuming the price is higher than the $50. So if you look at the original, the different the other purchase order, let me pull out the other purchase order, should be here, where there's no price difference. You'll notice that there's no price difference account, because there's no, this purchase order is the original purchase order, okay, where the price is still $50. When we invoice, the price is also $50. So as you can see here, okay, let me show you. See, there's no price difference account here, since there's no price difference. So this is the difference that you have to take note of. Okay, but there is a price difference here because the price has been increased to $60. So I'm going to post this now. Okay, can you see the invoice document has been created, but you also see an additional message here called blocked for payment. This is because for all the invoices where there is a difference between GR and GR price or purchase order price and invoice price, the system will block the invoice after posting it. So that's why it says blocked for payment. So when an invoice is blocked, we cannot pay the invoice. It will be in block status. Let me show you how the block status will look like. Let me go to display. Okay, go to payment. See this? invoice verification payment block. So we will update a invoice verification block so that no payments can be made to this invoice. Let me show you the difference. In this invoice where there is no price difference, is 300, where the each unit is $50. If I go here, this belongs to the earlier purchase order, right? The correct purchase order where there's no price difference. If I go to payment, there's no block, it says free for payment. Okay, see the difference? The system will automatically assign a block for this document for which we posted a variance in the price between purchase order and an invoice. So this means that, let me just go to payment. When I want to do payment, I need to use a FI document number, that's why I'm choosing this. And when I go to payment, go to accounting, financial accounting, accounts payable, document entry, outgoing payment, post. Let me try to post a payment, see whether the system will accept or not. Okay, I choose date, and an account is bank account. Let's choose any bank account. Cash in bank. Okay, let me choose that. So what is the amount that I need to pay? Is 396. And let me process open items. Oh, I need to enter the account, vendor account 40001. This is an FI transaction, so you don't have to remember this. I'm just showing that this invoice cannot be paid in a FI module, so just observe for information purposes. Just choose the invoice, the last invoice, which is this, right? So just double click, or no, not double click, just highlight it, activate items. Yes, I want to pay this, so I'm going to post. Let me see whether I can post. Let me simulate first. Simulate again. Okay, correct the marked items. What is that error? Okay, due on. I need to enter a due on. Don't worry too much about it, because as I told you earlier, this is a FI transaction. The MM guys need not know how to post this. It's only for information purposes. Okay, now let me post this, see whether I can post. That's strange. I can post this invoice. Although I have a payment block, how can this happen? Let me just check. IBL1 and 40001. Okay, I know why. Let me check. It's a payment block. Free for payment. close this. There's the other one. $93. Okay. 360. Okay, let me go to follow on documents. Okay, this is the one which has got a payment block. Let me check this. Yes, there is a payment block here, right? And oh yeah, so this is the one which has got a payment block. This invoice. Let me check this. Yeah, there's a payment block here. Okay, the only thing I can tell from this is that although the document is blocked for payment, we can do a manual payment to this invoice, so that is not prevented. But where it will prevent is that I cannot do a automatic payment as long as there is a payment block. Let me just prove this theory. I'm going to reverse this out. Okay, let me see how I can reverse this. FBRA, I go to FBRA. I'm going to reverse this posting, the payment posting. Yeah, reset and reverse. Reversal reason, reversal in current period. Okay, so just cancel. Let's reset. Okay, now it's open again. Let me try to do a automatic posting with the payment block R. I don't think the system will accept automatic posting, so let me do this. Run date is today, which is 5th January 2009. Identification 1, vendor 40001. Okay, company code Sun, payment method let me just check which payment method is available. T, yeah, T can be chosen. This is my earlier payment that we did, so I'm going to choose from there. Identification 1, parameters Sun, company code, payment T. Next payment date is 5th. Again, don't worry too much about this. This is a FI transaction. I'm just going to prove that we cannot make payment if the invoice is blocked. Proposal, start immediately. Right, running. Refresh this. Okay, display proposal. Alright, there are some rate items. Let me see what is that. This is the invoice. Let me see whether this can be paid. Item is blocked for payment. Yeah, this is what I wanted to show you. I'm going to ignore. I'm going to pay only that document number. So what I'm going to do is that I delete this payment proposal. I come here, parameters, freeze selection. I choose the document number, which is this. I'm going to pay only this document number, which is blocked for payment. Alright, now I'm going to run the proposal again. Immediate. Running. Proposal has been created. Display proposal. See, there's a rate indicator here, which means that this document cannot be paid. Let us check why it cannot be paid. It says error 003. What is error 003? I have to double click this. Payment block R. Item is blocked for payment. So the payment block is affected only when I do automatic payment. This is strange, but when I do manual payment, I can pay that regardless of the payment block. Remember I showed you just now. Alright, so anyway, doesn't really matter. What we need to understand from MM point of view, the financial document will have an indicator called R, which is for invoice differences. See, invoice, the payment block is applied during the invoice verification here. So what will happen is that based on the payment blocks, the financial accountant will have to check all the invoices which are blocked due to differences and remove the block if he wants to allow the payment to happen for the invoice. So he will make a decision. He will contact the vendor and double confirm that the price difference is genuine before removing the block on the invoice to allow a payment to go through on the invoice. So where he will remove the payment block, I'll show that in a later topic under the invoice payment blocks. Okay, let me go to the quantity difference. What will happen to the quantity difference? Let me just create another part for that, because this part has become very